Now let's move on to this particular question. Okay, now let's move on to this particular question. An entity AG company purchased an item of plant on 1st January 2020 for $38,000. Although the payment for the plant had been correctly accounted for, it was treated as a repairs and renewal expense. Okay, so the AG company has purchased a plant. It's a fixed asset. However, it has been treated as repairs and renewal expense in the general ledger. AG company charges depreciation using the straight line basis at 20% per annum, with a proportionate charge in the year of acquisition and assuming no scrap value at the end of the life of the asset. How will AG company profit for the year ended 31st March 2020 be affected by the error? Okay, so this asset was purchased on 1st January 2020 and the financial year end is 31st March 2020, and also the plant has been treated as repairs and renewal expense. So what is the effect on the profitability? What is the error? As a result of this error, what is the impact on the profitability? You are given 4 answers, of which we need to identify the correct answer. Okay, so to determine how AG company's profit is affected by the error, so let's analyze the situation step by step. So you are given set of information. So let's analyze the key information given. Okay, cost of the plant is 38. Cost of the plant is 38,000. Cost of the plant is 38,000 and the date of acquisition 1st January 2020, and the depreciation rate is 20% per annum straight line basis. Proportionate depreciation has to be charged. So this has to be charged from 1st January until 31st March 2020. So only for 3 months depreciation has to be charged based on the proportionate depreciation. What is the error the company has made? The plant was incorrectly treated as repairs and renewal expense, fully deducted from profit. Okay, so this is the asset value 38,000. This has been charged as an expense. So therefore the profit has been understated. So what is the correct treatment? The plant should be capitalized and only the depreciation expenses should be charged, and as a result of that it will reduce the profit. So depreciation for 3 months will be, we need to calculate 38,000 times 20% for 3 months. So which is going to be 1,900. So what is the impact? So what is the impact of the error? The full 38,000 was incorrectly recorded as an expense, overstating expenses by 38,000, and the correct expenses should have been only 1,900, which is we calculated. So as a result of that, so what should be the adjusted profit? The overstatement of expenses 38,000 minus 1,900, that is the correct expense, which is the depreciation. So 36,100. So therefore the profit is understated by 36,100 and you have overstated the expenses by 36,000. So your correct answer is, so therefore the correct answer should be, the profit is understated by 36,100. This should be the correct answer. Now let's move on to the next question. Mary's draft accounts for the year ended 31st October 2015 had a loss of $26,834. On investigation, Mary discovered the following. A debt due of $750 should be written off as irrecoverable. Okay, so a debt due of $750 to be written off as irrecoverable. The allowance for receivables should be reduced from $2,350 to $1,980. the fixtures and fittings depreciation charge amounting to $870 had not yet been accounted for. So what was the adjusted result for the year? Okay, so now you are given a loss of 26,834, and after making these adjustments, so what should be the adjusted result for the year? So it can be either profit or loss. So you need to delete which does not apply. Okay, so to determine the adjusted result for the year, what we need to do is we need to analyze how each adjustment affects Mary's draft loss. So now let's go through the adjustments one by one. So these are the given information. You are given a draft loss of $26,834. So these are the required adjustments. Write off a debt of $750 as irrecoverable. So when you write off a debt as irrecoverable, that will be an expense. So expenses will increase the loss. And the second adjustment is reduce allowance for receivables by. The second adjustment is to reduce the allowance for receivable. So this amount will reduce by $370 because there was an opening balance of $2,350. However, the year end, the provision or the allowance should be $1,980. So therefore, you need to reverse the expenses originally provided for. So originally we provided $2,350. Now you need to reduce the provision to $1,980. So therefore, this is a reversal of expenses. So therefore, it will reduce the loss. Third adjustment is depreciation on fixtures and fittings of $870. So when you take the allowance account, this is the allowance account. The opening balance is a credit balance 2,350. So when you make the closing balance 1,980, okay, so this is the brought forward balance. So this is the carried forward balance. So therefore, in order to make this 1,980, when you balance this 2,350, 2,350, so difference of 370 to be transferred to the profit and loss account as a credit. So when you credit the P&L account, the losses will reduce. The next adjustment is depreciation on fixtures and fittings of 870 has not been recorded. So therefore, this will be treated as an expense. Therefore, it will increase the loss. So impact of adjustments, write off irrecoverable debt. This increases the loss by 750. A reduction in allowance for receivable. This reduces the loss by $370. Depreciation expense. This will increase the loss by $870. So your calculated adjusted loss or the profit will be to the loss. What you need to do is 26,834 is the loss. You need to add back write off 750 and you need to reduce the loss by 370. Again you need to add back 870 for the depreciation expenses. That will increase the loss. So once you make these adjustments, your adjusted loss will be 28,084. So this is the answer for this particular question.